Well, the big question that everyone is asking is whether Fed will bite the bullet and raise the interest rate by 75 basis points, or will it stay on course to increase the rates by 50 basis points. And the setup has changed materially over the last 2 to 3 days. In fact, if you look at the expectation as of 7 June, 96% of the street was expecting that there is going to be a 50 basis point hike given the recent commentary coming in from Fed. But after that, we got that red hot inflation data which came in at a 40-year high level of 8.6%, and suddenly the expectations were reversed, and now 95% of the street is expecting a 75 basis point hike. And this chart will exactly tell you the kind of change that we have seen. The white line is what the Fed dot plot had suggested, and the blue one is the most recent information that we have got. And look at the change as far as the expectation goes, and this is now what the street is expecting. And the reason is, of course, that the setup has changed materially. Inflation, as we talked about, has come in at 8.6%, and now Fed has to walk the tightrope between looking at a possible recession or taming inflation. Separately, 10-year yield has also spiked all the way to 3.45% as compared to 1.5% at the start of the year, and that tells you the risk of sentiment which is there across the globe. Very recently, we saw the inversion happening of the 2-year bond yield in US as well as the 10-year bond yield, and that has been an indicator of at least recession historically. Whether that happens or not is something that we'll have to wait by for. One positive data for the US Fed is that the employment rate has been steady at around 3.6%, and that gives them a bit of wriggle room to increase the rate at a higher pace. Risk of sentiment is something that we have been talking about, and it is quite visible with this chart as well. Look at the cash levels that have been going higher. In fact, it has moved to the level of around 5.6% and continues to be really high, at least the highs that we have seen over the last 2-3 decades, and that tells you the kind of nervousness in the market. Also, I'll watch out for the economic projections coming in from Fed. They're likely to change the inflation as well as growth estimates, so that will be important to track as well.